Welcome back to the channel, Crypto Trend Trader, and today we're going to be taking a look at Home Depot Inc. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So we're taking a look at ticker HD, Home Depot, doing some long-term technical analysis with a short-term potential trade opportunity. But before we get to that, let's look at where we came from. So back here in the dinosaur days, 1982, this thing was literally trading for a couple of pennies. Nice run-up. Back test, hold support, nice run up after that, up until 2000, roughly 2099. And then we see the breakdown from the dot-com bubble burst, a push back up and lower high, and then a new low actually takes place in the GFC, or the housing market crisis. But very important, does not put in a new high from this level. From that point on, after the low in 2009, we then went on a pretty parabolic run right here. We see a notable pullback for the Rona dump. And then we see a blow off top spike here. And then we see essentially we're threatening the 821 bear cross. But now the last little move to the upside has reclaimed that cross. Now we see here when we topped out in 2000, something similar. We actually cross bullish again. And then we go to a lower low. We come up again, take out the previous high. And then we go to a substantially lower low and back test the 200s. So that doesn't have to happen, but it's worth noting that it could potentially happen. And if we look at the key swing, essentially being the various legs up along the way, just to kind of see like historically, how does this thing tend to correct? We can get a rough idea what to expect. So this little push up here was basically a 382 correction. So pretty typical bullish correction. And then we went on to higher highs after that. And then from this low here in 1985, arguably the pullback off this spike top right here was right at the 618. So again, very technical. We then see another high, and then this one is clearly like the top right there. I don't see a deep enough pullback. And then if we just follow that all the way up to the top right here, we'll see basically this whole run up right here looks like this may have been essentially an entire like 5-wave structure, impulse, whatever you want to call it. So basically if we take our low from 85 and we give it our high from 2000, we see we almost come down to 236 but don't quite make it. And then we go sideways for quite a while, but we eventually put in that lower low and we do hit the target at the 236, which is essentially our minimum Fibonacci retracement that you would expect. So then from that point, I'm going to go ahead and ditch this. We're just going to look at that push up here. So from our low that we hit after the 2008 crash, all the way up to our current price action now, which was a recent top in 2022. So we can see here the potential to bottom out. The first Fibonacci, the 236, would be all the way down here at 197, and the 382, which lines up with the potential target of the 200 exponential and simple. If we do something similar to what we did in 2000/2008, will be all the way down here at 124. So we're still a ways away from that. So then in the meantime, let's look at this little area inside of the macro fib. So we're just going to again draw a fib from bottom to top right there. We'll switch this one to blue, and we see from the low there on the Rona dump all the way up to the high, recently all-time high, we see a pretty clear pullback to the 382. Not only do we see a pullback to the 382, we see a back test of the 236. So trading very technically on the monthly as we basically push down below the 382 but don't close below it. And now here we are back testing the 236 again, and we have a higher monthly close. So last month's monthly close took out the previous closes and then broke out. So now let's try to figure out where this thing's going to be going long term. So we'll turn on our indicator oscillators and just kind of take a look here. We're going to turn off our drawing tools. And we see obviously we operated inside of the bullish control zone for quite a while. We now had a deep enough retrace that we made it into the bearish control zone. So obviously this thing stays very bullish for a long time. Eventually comes down to the bearish control zone, had a nice run up, came back down to the bearish control zone, and then went straight back into a macro bull market. Putting in clear higher highs on the histogram, we now see all red histograms, red slope line, and we have back tested the 0 line. We do see a couple green histograms showing up here, so there's some sign of life trying to push back up here, but we have to be very careful that we don't just come up and put in a lower high. And again, we have left the bearish control zone, but the Stoch's still powerfully angled to the downside. We see the blue Stoch is starting to turn up, but we're still well away from a hard buy signal on the monthly. Now let's come down to our shorter time frames. Here on the weekly momentum wise, we see we spent most of the time in the last decade in the bullish control zone. Just going back a long time, occasionally we see retraces into the bearish control zone where it's highlighted green here. And then once we come out of that area, we typically see that was the bottom. Here we basically came down to the 200s. pushed up, ran into some resistance, came back down, retested the bottoms, essentially double bottom with bullish divergence. We see a lower low on the histogram compared to this one. We see a lower low on the blue stochastic compared to this one. We see the same low here on price action. So we now see bullish divergence. That bullish divergence has exploded to the upside, retested the previous level. And again, on the weekly, we're closing up here higher than the breakout point, telling us we're likely to get the measure move breakout of our W double bottom. And obviously finding key support where you would expect on the 200s. So now here we are all the way down on the daily. So the main things we want to pay attention to here are, obviously we have those macro levels we're paying attention to. This is our W right here. This is also our key level for the Fibonacci retracement. So we see obviously we're in a range between these two Fibonacci levels. We push out the bottom a couple times, we poked out the top a little bit, but we haven't seen continuation in one direction or the other. So whenever we're trading in a range, bouncing around like this, I would expect us to stay inside that range until the one time we don't. And then when we don't, we would expect to get the measure move. So we'll take our drawing tool from the bottom to the top and say we have a bullish breakout. There's definitely potential for that to happen. So we'll flip that green and we'll say, okay, if we break through this neckline right here, the measure move back to the upside would take us roughly to $400, currently at $327. So over 20+% move to the upside if we do break out from this level. Nice looking setup, 22%. So there's our measure move to the upside. If we break through resistance, we have already reclaimed the 200 exponential and simple. They were bearish here. We back tested them, got rejected, double bottom, back testing that same level again, back on top of the 200 exponential and simple. We do have a hard sell signal. We did just leave the bullish control zone, but the Stochs are trying to push back up here one more time. Same thing with the histogram. We came down here, we put in a bunch of red histograms in a row. Now we're seeing a little green. We're going to try to push up here one more time. What we're going to pay attention to now is the internal retracement. So if we take from our all-time high right here and we just drag another fib down to our recent double bottom low, and then we're going to flip the color on that one to yellow. And then if we just look at those yellow levels there, we see again the 0.5 is a clear touch right here in yellow. If we break through the 0.5, the next target would be the 618. And then what we would expect is a potential 786 retest, and then potentially lower high go lower. Or if we break above the 786, we know statistically we're likely to retest the top of the range and potentially go to new all-time highs after that. So what is the actual trade setup? Obviously, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. We have the minimum target up here, 7.4%. We have our 786 target of 16.31, and then we have the measure move of 21%. And then what is the invalidation level? Well, obviously we know if we lose the 382, we're probably going to retest the 200s. If we lose the 200s, probably going to retest the 236. If we lose the 236, probably going to retest. So we just have basically just level after level to the downside. But the thing is all those levels are support. So we got back above the lows, with that double bottom. Then we got back above the 382. We got back above the yellow 236. We got back above both of the moving averages, the 200s. They're both flipped blue now, and we're back on top of the 382. So I could confidently say that if I look at this setup right here and today's specific price action, I say, okay, if we break down below the recent lows right here and we lose the 382, we're probably going down to the 200s or the 236. We can reevaluate down there, run a tight stop, 4.5%. And then we have either the 618, the initial move to the upside, or we would expect at least a breakout of a 786 and what's going to look like a bull market to see some continuation. That's a 15.88% target to the upside, 3.5 to 1 risk reward ratio. And then there's always the potential that we go to the 886 or the double top here, or new all-time highs. We're talking about 28%. But if we just stick it here and say we have a 16% target to the upside, we have a 4.5% stop loss. That gives us 3.6 to 1. We're on top of the 200 exponential. We're on top of the 200 simple, and they're both blue. Technically, they just flipped back into a bull market. So the same way I was bearish here, we flipped into the bear market. Now we get a little double bottom, bullish divergence, breakout to the upside, reclaim these levels, flip the moving averages back, and now we're looking at a measure move, W double bottom setup right here. I like it. I like it. If we're looking for a position, we're looking for a trade setup, this is it. So we have obviously invalidation levels via the stop loss. If we come down here and we do hit the 236 and it looks like we're in a hole from there, we could potentially enter into another trade at that level as well if it starts looking juicy. Obviously it is, dependent on what the situation is. But again, we would still have the same target to the upside. We would still be putting in, a double bottom, and then we come back down. We could put in a higher low right here and then still go to the upside, and it would actually look good. It would look constructive. We come back down, we retest the 200s, we retest the 236, then we get a move to the 618 or the 786. So where does that present us at? Again, if we say we're going for minimum the 618, that puts it at 19%. And if we're still looking for that same high, that's 29%. And then what's our stop loss going to be? Well, if we're down this far already, we might as well just say, so if we take out the low here, that would be our stop loss. Or potentially we could say if we take out this key macro fib level on long enough time frame. So it's the difference between a 6% stop loss and essentially a 10% stop loss. So for me, I always like to reevaluate at a lower level. If we come down here and retest those lows one more time, it's going to look like, you know, more likely to break to the downside. I don't typically like to see that many tests in a row, especially when we're range bound like this. But we can always reevaluate. We're at resistance now. It looks like we're getting ready to break out. Looks like a lot could happen. We obviously have, you know, inflation data and the next rate hike coming out. But if there's no surprises, you know, technically the 0.5 rate hike, 50 basis points is probably, you know, arguably already priced in. So if we don't get some crazy hawkish guidance or something bad, there's a good possibility this thing is headed back up to retest these levels, if not at new all-time highs before long. So we'll just kind of tighten this up here. We've got our stop loss in place. If we break down below this level, roughly like 7%, upside target 28%, 4-to-1 risk reward ratio if we get there. So we could enter into, you know, potential trade entry right here. We could double down when we get here or wait until we get down here. But there's definitely some trade setup potential to the upside, either 15 or, you know, roughly 29%. So long term, actually, this thing's pretty bullish. It could easily go lower from these levels, come up here, put in a lower high, you know, from the initial high. So we have a high, a low, a lower high, and then a lower low, and continue to go much, much lower. But in the meantime, there's definitely some potential to go ahead and scalp this to the upside. And if you believe the other way and you're like, man, I don't think so, we're actually at resistance right now, I don't care about these moving averages, this is a fake out and we're about to get rejected and go back down to the downside, you could alternatively enter a short position. And that's what's so great about what's happening right now in these markets. There's so many setups that just you don't even have to have a bias one way or the other for. So obviously if we get back above that 0.5 level, we said we're probably going to retest the 618. So if we break above that 0.5, we know, okay, we're on the wrong side of this trade. So we could run a super tight stop loss from where we're at right now. You know, it's set at 3.5%, which would give us a 339 stop loss. We're currently at 327, and that gives us a target. Back test to the 236 would be our initial target. That's going to give us a 2.78 to 1, you know, 10% downside, 3.5% upside, or realistically, we'd be looking to come back from one fib to the other, from the 236 retest back down to the 382 retest, and then it would just be basically a W, a retest, W retest, and then just a retest of the lows as well. So that gives us 15% downside, 3.5% upside, 4.32 to 1. So regardless if you say, hey, we're now bullish, so this is against the trade, against the trend, less probability of playing out, with 4.32 to 1 risk reward ratio, still a perfect setup. 2 to 1 risk reward ratio to the upside is our minimum, or with the trend, and then 3 to 1 risk reward ratio to the downside, or against the trend is our minimum. And then obviously vice versa if we're in a bull market versus a bear market. So overall, definitely some potential here in Home Depot. This thing looks like it's getting ready to break out to the upside. Obviously, it is a big name in the Dow Jones Industrial, and we see essentially a lot of those names had a very, very similar setup and then have surged to the upside. So is there a opportunity here on a Home Depot? Whether you're bullish or bearish, there's definitely some opportunity for some favorable trade setups. And if you don't have a, you know, preference one way or the other, you can always do both. You know, options or just straight up. So that's it for today. If you did enjoy today's video, make sure to like and subscribe. If you have a recommendation or request, leave that down in the comments below. But that's it for today. Crypto Trend Trader with our long-term technical analysis on Home Depot Inc. Ticker symbol HD from the monthly to the daily with some potential trade setups and targets. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Crypto Trend Trader, and I'm out of here.